as I mentioned before, I was trying to look at multi-lets. Mainly, I was looking at, say, buying a 3 or 4 bedroom house and then renting out the rooms. But I found this house, and it was particularly a bit better because um, it can be split into different sections. So I wouldn't have to rent it out room by room. Instead, I can split the house into two parts, into a 2 bedroom flat and a 3 bedroom flat. It has been split before, so there was already electricity running for two different parts of the house, and it was easy to split because there was two bottoms on either side of the house. I just needed to add a kitchen on the one side. Um, so there is a bit of renovations that need to happen. I do need to say add a kitchen, a bit of paint here and there, and then there was also a 2 bedroom double story outside cottage, which is also great. And then there was a garage that was one part with it was joined to a servant's quarters. So I was planning on making that flat, and then that can also be its own unit. Um, I can show you the property, but I'm not sure if you're interested. But
I think let's do that. I think let's start from the beginning. Maybe you can show me the property. It's on property 24, I'm assuming.
yes, it is. I will just
Let's look at the
open that.
property, just the photos and stuff, and then just determine what the actual property looks like and so on, and then we'll go from there. Just for me to get some insight about everything. So you can maybe share your screen, and then we'll
It
check.
says that host disabled screen sharing.
Let me just check it. Okay, just try again.
Okay.
There we go.
Let me know if you can see it.
Okay, so
Cool. So
it's originally a 4 bedroom. I'm assuming that's the, or is it
yes,
divided? There's a fourth bedroom, so it's a four bedroom.
no, it's a 4 bedroom place.
Okay, so you said
Um,
it's divided at the moment already.
no, it's not. It was
Okay.
divided
Oh,
before,
okay.
and then they opened it up again. So here, where this wall is like a super huge lounge.
Yeah.
It was divided into two, and then even after you divide it into two, it becomes a reasonable sized lounge.
Okay.
So the house is essentially divided on the side, can be divided here, and then it's basically split into a smaller part. So it's split into 3 bedrooms and 1 bedroom. But because the other side of this part is very huge, I was thinking of making it a 2 bedroom flat with a lounge and then a kitchen and a bathroom, of course.
Okay. So is it currently being
Um,
used as a family home?
yes,
Okay.
yes, it is.
Yeah, that seems quite large.
So as I mentioned,
Yeah.
it was split here. I think that they also just they maybe did maintenance on the one side more than the other, so
Yeah.
the floors are not 100% as nice the side. But I do think that I can just revarnish the
Okay.
floors, sand it on, and revarnish. Um, the kitchen, it's tenantable almost. It might need a bit of work, but not too much. So I've seen houses where the complete kitchen has to come out.
Yeah.
But
Some
here, maybe
cosmetic work.
yes.
Yeah, that's fine.
Um, then the bedrooms are also kind of big for most of them, I believe. They the walls just need paint, I think, and they have built-in cupboards that are decent quality or decent. I mean, um, yeah, they're fine. The bathrooms are not super nice, and the floor tiles are also not great. They might need updating, but I think that I can do that at a later stage, maybe.
Yeah, I mean,
The kitchen also has the same.
for what you're trying to do, it doesn't necessarily have to have the best tiles and the prettiest stuff. It needs to be neat and in working condition. Especially the people that you're obviously targeting, it's not going to be a high-end rental. So obviously, if you spend a lot of money on tiles and kitchen cupboards, that changes the deal quite a lot. So those tiles, they look fine as long as they're not cracked and damaged, and they clean. That's definitely okay.
Okay. So this is the one bathroom. This bathroom was going to be part of a 3 bedroom house that after splitting it, um, I believe the shower is going to be part of the two-bedroom apartment. It's a big shower, but mostly everything seems okay inside it. It just needs cleaning.
Yeah.
Uh, there's so many pictures. So this is the front yard. There are some. So the veranda has a corrugated roof, and it is broken a bit. I think that this can easily be fixed for not too much. Because I mean the structure is fine. It's just we need to replace the roof sheets. And then this is the backyard. As I mentioned, this is the garage. So the trick here, the issue here is that Durban has a lot of floods. Well, had a few floods in the past few years, and the roof got damaged.
Okay.
So we do need to kind of fix the roof and also add a shower and a small kitchen inside this before it can become a flat. I was thinking of trying to do it on a budget, so have the roof structure fixed, make sure the roof structure is fine, then add corrugated sheets again, and then just paint it to make it look presentable.
Those are roof tiles.
Obviously,
Did you actually see what
no,
the problem is with the roof specifically?
I think the tiles came apart. Maybe it could be that most of the tiles are still fine, but the tiles did come apart, so they came loose.
If it's just the
We
tiles,
could
that's a
probably put the
quick,
tiles back.
yeah, that's a quick fix. If you just need to replace some of the tiles, that's not too bad. If there's structural
Um,
problems, that can be quite expensive. But I mean, if it's just the tiles, then it's quite easy.
so it's really just the tiles.
Okay.
The issue is that I'm not sure I'll find the exact same tiles to match the ones that are
Yeah.
currently there,
Yeah.
but I can try, and it might be a lot cheaper actually. Um, as I mentioned, this is the backyard. It's spacious. It's more spacious than others in this neighborhood. Then the front, the backyard again, and then this is the cottage. So currently here is something like a bedroom here. The top floor is all divided into its own bedroom, so the whole top floor is a bedroom. Then there's like a sitting room, lounge, an entrance, and then a kitchen. So it could be like a dining area, then a kitchen, and then over here is a bathroom. I'm not sure to show all of it, but yeah, this is the inside. So you enter, this is like the dining room place. There's a kitchen here, and then a bathroom on the far left. This is something like a lounge, but it could be made into a bedroom by just closing off. So there's a whole random hole here.
Okay.
I think if you do put bricks here, it could become a bedroom. Um, I think that's all of the pictures. So this property has been listed many times actually, and I can show you from a different view if you want.
Okay.
So this is the top of the cottage.
Oh, okay. With the
It
cottage,
was
are you planning to put two separate tenants in the cottage? Do you want to rent it out for, let's say, two people who's a family or whatever?
I
What's
want
the
to rent it out to one tenant,
one tenant?
hopefully.
Okay.
So from what I can see, the rentals, a two-bedroom place in Nambilo in Durban goes for about 6.5. I was hoping to
Okay.
get a minimum of 5.5
Yeah.
for each two-bedroom. So I am trying to also be prudent when I'm guessing the rent. I
Yeah.
did use Pocket Let and I did use Property 24 and search for rentals, then just look at the minimum ones.
Perfect.
I'm trying to be as prudent as possible.
Yeah, rather be
Um,
conservative with your rental. I think that's smart to do that. With the okay, so that's quite nice with the flat outside. So in total, how many people will you be housing, including the cottage as well as the main house then?
So, as I mentioned, I'm gonna split the house. I want to rent it out as a three-bedroom place to one tenant, and
Okay.
then I don't know if there can be a family. I don't know if this is a good idea because I know that with larger uh, houses or apartments, you might have less of a demand, and also a family might not want to live in a shared yard.
Yeah.
But at the same light, you do get three-bedroom flats where families live there, and it's kind of the same concept.
So inside,
Um,
with inside you want to rent it with you want to split it and then one rented out to a family, let's say the 3 bedroom rented out to the family, and split it and make a separate, like, let's call it a bachelor's in the house as well.
Yes, yes. On the other side, they have separate entrances
Okay.
and everything's fine.
And
So I
then
was going to split it up in one tenant per dwelling.
okay, and then the couple outside as well.
Yes, and the garage
Okay.
eventually would become one person also.
Okay, yeah, so there's obviously quite a lot of potential if you do some minor repairs and maybe move a few things around and maybe drywall some places. So that's nice. I see why it seems like a nice deal. I think before we go ahead, maybe we can jump to the numbers and then you can just kind of talk and go ahead, and I'll just talk in between if I see something. But I like the way it looks. I definitely also see the potential. Obviously, I don't know the area and the demand there, but I'm assuming you do. Um, but yeah, I'm assuming you
Um,
also did the property Excel sheet. Um, maybe we can jump to that.
I also downloaded the TPN and Lightstone reports.
Okay. What's the
Um,
value with the TPN report? The
so
property value.
TPN says the value is 1,280 and Lightstone says 1,290.
Okay, so if you
So
it's
I
listed for under market value technically.
yes,
Okay.
yes. Well, there are three listings, one for 1.3 and then one for
Okay.
1,250.
Yeah. How long has it been on the market? You know.
Maybe since the beginning of January, I think.
Okay.
There was a previous buyer. They first he didn't get a bond for 1,250, then he didn't get a bond for 1,150, but both offers were accepted.
Okay.
Now there's another buyer currently at 1,150, and I think that's the minimum that they'll take.
Yeah, 1,140. That's a pretty good offer. Okay, let's jump to the numbers. Let's quickly check out the numbers and stuff.
Okay. So it's 1,280, and I was on the maximum I could offer was 1,150. I
Yeah.
did try. I did try a lot less in the beginning, but they
Yeah.
didn't want that. It's a 10% discount and there's 130,000 equity. Then the 22,000, I came up with it from somewhere. So it
Yeah.
was,
Let's
I
break
said
that down.
it's five times two because I would have a two-bedroom cottages or flats. The minimum rents really, according to Property 24 for a two-bedroom flat was 6.5. But again, I was trying to be conservative. Then 8,000 rand for the three-bedroom house apartment. Um, on average, according to Pocket Let, it was 10,000 for a three-bedroom house. Pocket Let's a tool that averages up. I'm not sure if you've seen it.
Yeah.
And the minimum was 8,000 on Property 24 and private property. Then also I said 3,000 for the one bedroom, although again conservative. And this is how I came up with 22,000.
Okay, you said the five
Optimistically,
and a
I,
half.
I
Sorry for interrupting. The 5.5. You added that twice. So 5.5 is for outside the cottage outside, and then where's the other 5.5? Is that when you split the?
yes, the split part of the
Okay,
house
so
where there's going to
you'll
be two
try
bedrooms.
to make when you split the main house, that will be a 2 bedroom and a 3 bedroom, or will it be two bedrooms? A 2 bedroom
It's
and a
going to be a
three.
two-bedroom and a three-bedroom.
Okay, okay, perfect. You can go
Because
ahead.
remember, the other side is a bit bigger, so I was going to add a bedroom
Yeah,
using drywall.
and then the 3,000 is for the garage.
Yes,
Okay. Yeah, I think that's quite
yes,
conservative. I see you added the optimistic side of 25.5, which is good.
yes. This is a bit more optimistic, and it will change the numbers quite a bit. But
Yeah.
I'm not. I want to place a tenant as fast as possible, a good tenant as fast as possible, rather than waiting a long time and not getting any tenants.
Yeah.
Um,
Sometimes
they,
it's also better just before we go ahead. Obviously, once you buy a property, you want to get a tenant as soon as possible. But sometimes it's better to wait for a right tenant, meaning waiting a bit longer instead of just placing any tenant. So sometimes good tenants it's difficult to find, especially if you do credit checks and you kind of look at all the stuff that they need to provide. So it's easy just to kind of put someone in just to rent the place out as soon as possible. But out of experience, sometimes it's okay to wait a month or 2 months just to kind of find the right tenant as well. So just keep that in mind as well.
Okay, definitely. So I was considering managing it myself, because having a letting agent will actually affect the numbers quite a bit. Um, Although it will still be positive cash flowing.
Yeah,
But yes, it's a consideration to at least add a letting agent, have a letting agent to place the tenant. Although I know that I can do credit checks using TPN anyway,
yeah.
and they might just do the same thing and not
What I've seen
add
is
anything
as
extra.
well with a agent, the most difficult part of like rentals is placing a tenant. Managing a tenant is really quite easy, and it's a passive way of like handling stuff. Placing the tenant is the difficult part. So if you're happy with that, then it's definitely not necessary to pay someone 10% every month to manage a tenant. So I know some agents offer packages to place tenants as well, but I mean you can use TPN and you obviously know what to look for with credit checks. So it's definitely not necessary for using a or to use an agent. So it's definitely you can obviously play around with the numbers and see what's the difference if you add the commission. But I feel that it's not as difficult as it seems. I mean the placing is the most difficult part. So if you're comfortable with that, it's definitely not too bad.
I think I would probably do credit checks, check salary, maybe 3 to 6 months of salary,
Yeah,
make
bank
sure that
statements.
it's, yeah. Maybe also check that they actually are employed. That's
Yeah,
probably what I would check. I don't know if there's
yeah.
anything else.
Yeah, the
Okay.
credit
Because,
checks on TPN helps a lot. It show if you see someone has a lot of outstanding debt or they're not good standing, then they give you a score. I'm not sure if you've done the TPN reports before, but it shows you
uh,
like A, B, or C or whatever. So if someone is a D, it's a red flag. You can see that they have a lot of outstanding debt. They're not paying their debt and they're behind on debt. So that works really nicely. So you'll definitely be confident if you draw a report like that.
okay, cool. Because I do think that the placing fee is like the first month's rent, which is quite a
Yeah.
bit in this
And then
case
they charge you a monthly, let's say 10% or whatever. Okay.
for management. The bond is 10,735. I think this is 11 point or 10.75. I did try 11. This is also fine based on this, obviously.
Yeah.
So
Is that
11 is still
30
fine.
years?
And yes, for 30 years. I hope to get 30 years.
Yeah. You're young, you'll be able to.
Yes, yes. And also, I've had credit for a bit. So I did do pre-qualification with my home loans, and they said that my profile is good.
Okay, great.
I think great or something.
Yeah.
Um, I've added insurance of 500. I don't know if this is realistic because I've never had house insurance,
Yeah.
but from what other people have said on YouTube, and I think yourself also,
Yeah, that seems
maybe,
fine.
um, the rates and taxes on this house is 1,075 rand. I've added 15% for vacancy and commissions. This is prudent. It's very conservative.
Yeah.
I'm not sure
I think
if it
that's
should
a
be more or
good
less.
starting point. If it work, if your deal works with 15% vacancy, that's fine. Obviously, vacancy and repairs is not a monthly expense, so it's something that you kind of need to put aside. So even if you don't have vacancy, that money goes into your pocket. So you just need to be able to keep that money somewhere that if you need it one day. You can maybe with the multi-lets, you can try pushing it up to 20% and doing your repairs at 10% or whatever and playing around with it a bit. But let's keep it at 15-15. That seems realistic.
Okay, cool. Um, so Wi-Fi, I don't think I'll have Wi-Fi in the case where I rent it out to one tenant. So if I rent out the whole house to one tenant, I wouldn't actually add Wi-Fi. But if I rented it out room by room, then maybe Wi-Fi would be useful. And then I would add a charge for Wi-Fi. Water and electricity, maybe I need to account for water, but for electricity, I definitely want to install prepaid meters. Um, I'm still scared though that the water might go up to something that I cannot recover. So I do want to put water meters in, but I know that they're a lot more expensive than the electricity meters.
Yeah, I think with the water,
Um,
have you seen they? I'm assuming they're billing the water monthly. Have you looked at the municipal bill to see what the water is for the last couple of, let's say, months or whatever? Or have you actually seen like proof
no,
of the water bill?
no, but the agent did tell me that it's about 3.5 per month.
Yeah, that
So
seems
I,
quite high for water. This is
oh
definitely
no, sorry, the rates and taxes and water and
and
then
water.
electricity is 3.5.
Yeah, so that's
So
you said water and electricity and rates and taxes combined, 3.5.
yes, yes,
Okay, okay, yeah.
yes.
Yeah, but usually it helps to kind of look at least 2 or 3 months of the water because water can be a problem in certain areas. Sometimes there's problems with the bulk meter or whatever, and then now you're expecting the water to be 1,000 rand for the whole property, and then it's 2,000 rand, so that changes the numbers. So it helps to confirm, but that's something that we can add on to the OTP as well. We'll get to that later on.
So I did add the expenses to the but yes, we just need to look over everything again. So then total expenses 18.9. It's the expense ratio is a bit high, but there is a cash flow of about 3,000, and there's based on my transfer fees. So I did go to the Prosperity Enterprises people who are currently setting up my trust, but they also helped get conveyances. Well, they introduced me to conveyances, and apparently Prosperity Enterprises clients get 20% off
Yeah.
bond registration and transfer fees.
Yes,
So I'm going to use them.
that's great.
And based on this, my bond and transfer fees is around 55,000. Um, I added then money for renovations. This is a bit prudent, but it's not a bit prudent. It's a bit low, but a lot of the things I plan to do myself, well,
Do
me
it
and
on
my
a
father and my
budget.
uncle. Yes, I'm very much on the budget. So the this is just 1,000, and I don't really think that there's anything wrong with the fittings or the ceiling. Maybe it just needs paint. Considering we need to change to add a kitchen to the three-bedroom house because after we split it, we wouldn't have a kitchen.
Yeah.
This is for kitchen cupboards. Um, yeah, it's for kitchen cupboards. Then the stove also in the three-bedroom house. This I do think is expensive because, but I this is basically if you buy a kitchen set complete. But I also don't actually know how much cupboards go for. I did try get some quotes, and it was around this price for not so great quality cupboards. But I also think it
Yeah.
was where I was looking. Paints, I added this for the whole house, so inside, outside, and the garage and the cottage. The walls, oh, I added 5,000 for the drywall. This tiling was in case I needed to retile the kitchen and the bathroom. The tiles are fine, but they don't look nice. But anyway, this can be removed. Then I also accounted for 3 months of vacancy based on um, the bond and the insurance and the levies. So it's around 12,000. I actually could have done this better. But
That's a
yes,
separate
the
reserve that you will keep for vacancies, right?
yes, in the beginning. So
Okay.
as you mentioned, it does sometimes take a bit of time to place a good
Yeah.
quality tenant, and I accounted in case for 3 months if I didn't find a tenant in 3 months, which may or may not be likely. I'm not quite sure. But according to, say, the TPN reports and the fact that this suburb is closer to Durban CBD, it's not in CBD, it's maybe 15 minutes drive to CBD. So it's also around other businesses. I think that there is a higher demand, and probably I would not use the whole 3 months.
Yeah. Yeah, I think 2 months.
Um,
Usually, you'll be able to get someone within 2 months. But I mean, it's good to work with your worst case scenario, and then if it works with that, then it's great.
okay, so then there's taps. There's nothing wrong with the taps, but in case there are, I've added 3,000, so it might not even be necessary.
Now you can
The
call that
logs,
plumbing. Usually, there's a lot of stuff that happens with plumbing. Most of the time, that's like the most. One of the things that happens the most is plumbing issues. But I mean, that's to add that it's
um,
good.
yes. Also, we have to add a new kitchen, so likely we're going to need the pipes to go around the house to the other side where the kitchen might be
Okay.
for the three-bedroom house because there might not actually be plumbing.
Oh,
So
there's no water
definitely
point
think
on
that
that side. Yeah, so there's quite a few
um,
logistic that needs to be done regarding the renovations and the repairs and then adding the new kitchen and stuff. Um, but yeah, let's continue.
okay. So then I'm not sure if it's a safety issue if I do not replace the locks. There are locks in the house; they work fine. But after you buy a house, should you replace the locks in the house?
Some of them, yes, maybe main gates and stuff.
Okay, it has an electric gate, so that's fine. But then maybe the house locks actually.
Yeah,
Um, this is an unnecessary expense, and I might just remove it
yeah. You don't want
because
to
I
add
am.
stuff like that necessarily because people might damage it or it's definitely not. Someone won't or it won't stop someone from renting if they don't have blinds. Look at it that way. They can use their own curtains.
Yes, yes. Prepaid meters. So they are around 2,000 rand for a single phase meter. I don't actually know if I'll have three single phase meters or what is meant to be done, but they're around 2,000, I believe, from what I've seen in some quotes. I hope to get three. There's currently one, so I just need three more for the three different apartments. Um, then garage, we need to obviously add a small kitchen, a shower, and fix the roof, and then maybe do the flooring somehow. And then I did add a small budget for sanding and revarnishing the floors in the main house. Yes,
Okay, so the
finally,
the, the
I
money in
know,
the deal with all the expenses and stuff, that's 172,000.
yes.
Okay, so the return on investment there with the 21%, is that correctly calculated with the 172,000?
Um,
Just scroll up
yes.
quickly. Now just maybe check if you divide the your yearly cash flow with the 172,000.
So
It seems
it is the
correct.
cash flow times 12 divided by the money in the deal.
Okay, yeah, so that seems fine.
Um, the other figures, I do know that they're important, but not,
Yeah, you can focus on the gross yield. That if you do a deal and you want to quickly see, you can just check if the gross yield is above around 15%, then it should be cash flow positive. Your return on investment is the most important, obviously. Something just seems strange with the return on investment of 22%. Just click on that tab quickly. It's B34
the cash flow
or
divided
12K
times
40.
12 divided by.
Uh,
It is multiplied by 12.
yeah,
This is the
that's the
monthly cash
cash
flow.
flow for the 172,000. On
Yes.
both the green return on investment as well as the one that's highlighted in yellow, are they both using the 172,000?
Yes, they are.
Yeah. Okay, just quickly check with the return on investment when you don't do the renovations and you only use the 55,000. Return on investment should be much higher then. Use the top one or go to the yellow highlighted return on investment.
Oh,
Oh, you see, yeah, that's basically what it was, 67%.
yes, it does
Yeah,
become 67%.
now that's
Mm.
quite a lot.
But I don't think that, I think that some of the things I cannot get by without doing.
Yeah, no,
So
definitely.
I
I
think
just wanted to make sure
is
the calculations is correct there. But I mean, even with all of the renovations and all of the cash that you need to invest, 22% is quite high, so that is good. Um, I think there's a lot of stuff that needs to be done, obviously, and stuff that you can't go without doing. What I've seen with renovations, and unfortunately, it's difficult to kind of get quotes and stuff. But what I've seen with renovation and all renovations, it's always more expensive than you think it's going to be. So what I usually do is add 20% to the overall budget to be conservative. To know, okay, even
okay.
if worst case scenario, my prepaid meters doesn't cost me 9 grand. With installation, it costs me 15,000. As well as the kitchen cupboards and the most expensive things. Then okay, you've calculated for that as well, and the deal still makes sense. Then worst case scenario, it is still you're still getting a good return on investment, even if you need to spend more money. But in this case, I'm yeah, 18% is quite good. That's a pretty good deal, um, with all the expenses and stuff that you need to pay for. So that's just something you can do on every deal as well, to play around with the numbers a bit and change a few things just for in case. But I mean, this seems well. I understand why you want to make an offer on the property.
So the deal works fine for me. I At an earlier point, I was unrealistically getting like 30%, and I was so happy about it. But this was based on me actually them accepting the offer of 900 that I initially put in. Well, verbally gave an offer for 900, but they didn't want to do that because the seller isn't really distressed.
Yeah.
I did find another offer where there was a distressed seller, and the house is about worth 1.3. I could offer 700, and they would be fine with that, but I did take long, and someone else wanted.
Yeah.
Also, in that case, the answer wasn't good, so it had to be a flop instead.
Most of the time, if you're able to offer a very low offer for property or owner that's distressed and the property is like dilapidated, it might it can be a good deal, but sometimes you need to put more capital in the deal to bring it back to its original standards or whatever. So you just need to be aware of that. But I mean, with this deal,
Yes.
having an equity position of around 130,000 rand, that's really not bad, with the 10% discount. Um, so that's a pretty good offer. What I think, even if you can actually make a higher offer, if you really wanted the deal, let's say for example, you said the agent said they already received an offer. So if you're really desperate, you can always go in and say, okay, listen, the current offer is 140, you'll offer 160 or whatever. If the 10,000 rand is not going to make a big difference in the calculations. Obviously, the idea would be to buy it as low as possible. But if it's a really good deal, it's stupid to lose out on a great deal just to save 10,000 rand on your bond. Um, and if the deal still makes sense with the 10,000 rand added, then it's obviously a no-brainer. So that's something that you can consider. That's why I said you don't have anything to lose to make an offer on the property. There's something called a 72-hour clause. I'm not sure if you're aware of that on the OTPs, which basically means if the owner receives an offer, and let's say that offer has some special conditions, um, they have the right to still market the property for 72 hours. They still have time to market the property, and if they receive a second offer with no conditions, they need to give the first buyer 72 hours to complete all of his conditions. And if he doesn't, then they can accept another offer. So it's always possible to, even if there's an offer on a deal, it doesn't necessarily mean they'll actually go through and buy the property. If they need financing, maybe they said they're going to buy cash and it doesn't go through. So you have nothing to lose when it comes to that. And even if you make a bit of a higher offer, the owner might want to kind of go for the higher offer anyway.
Okay, so yes, the agent said that they're buying by bond with a bond, so there's a chance that it doesn't go through. And
Yeah.
also said that he's not confident that they actually have the cash for bond registration and transfer fees. So they might
Yeah.
be that.
Okay, good or bad for them, but good for you. So I think you should definitely still go ahead if you're confident with everything and you've done your research of the area and all those stuff. Obviously, I can't tell you if it's going to be a good deal or not. Based on the numbers that we've run now, it really seems quite nice. And you've been conservative with the numbers, and I really think those are as accurate as they can be. So it seems like a good deal. So I'm happy with that. I think with the maybe we can jump to. Oh, sorry. Do you have any questions regarding to the deal? Anything that wanted to ask here?
Um, I had so I'm not sure that can like the rentals. Can I expect the rents in a situation like this where I split the house into two, basically two big flats, to be similar to that of rent that I get that is charged like in a complex or whatever. Like so, essentially, can I compare my rent? Should my rent be something that,
I
like
think
that of a flat in a complex?
yeah. I think it's difficult to compare the rent that you'll ask with a complex because obviously it's two different properties. Maybe the complex is more private or whatever, but your property has an erf or some place where they have some freedom or whatever. So you can
Yes,
ask
yes,
yourself, will you pay that price for a property sharing property, or would you rather go and pay the exact same amount to get a complex? I think that's difficult to answer in the sense of you'll never know until you actually try. But maybe to get of you, you can kind of ask lower rent to make sure that you'll definitely get someone, because I don't know the area that well. I'm not sure if someone will be willing to pay, you know, market related rent for a property, or sharing property, or will they just go and live in a complex. So there's two things you can do. You can either bring down your rent, um, to see if it actually still works with the numbers, or you can kind of just go ahead with the rent, and if it doesn't work you can eventually bring down the rent. So you can list it for, let's say, 5,500 rand, and see if there's actually someone that's interested in the property. If you see you don't get any inquiries, there's no one that wants to come and view the property, then you might feel, okay, listen, this might be a bit too high. So it's always important to, like, this is one scenario that we've run with the numbers and the rental income. So obviously we added the optimistic side as well, but let's use the 22,000 as like an average. Then you can put in a pessimistic side of the rental income. Let's say you add, and instead of 5.5, you only get 4.5 with both of the flats. Then your cash flow drops 2,000 rand or whatever. Um, if it still works with that, then I mean you can still go ahead and try it. Change that to 20,000 rand. So a return on investment of 12%, um, is still pretty good considering what you can get in a bank account and whatever. But now you need to understand you're going to spend a lot of your time, a lot of effort, and obviously a lot of capital is going to be invested. So you need to determine, is 12% going to be worth it if you can only receive 20,000 rand of rental income? So that's a question that you need to ask yourself. Unfortunately, I can't answer that for you. Um, but I mean, with a deal that cash flows, it's quite difficult to find deals that cash flow. And I mean, with the current interest rate, if it still cash flows, then it's pretty good. So the 12% is definitely not bad, but obviously there's a lot of work that needs to be done. Just scroll down. What's the return on investment with all of the capital invested? That's going to be quite low.
With all
Oh,
of
it's 12, still
uh,
12%, 11.79.
I think these two
Yeah,
calculations are actually the same.
yeah.
What
Just go ahead. Just change
is
that
yours
to,
different?
yeah. Just change that to the where you only use your bond and transfer costs.
Oh, oh, yes.
I think that's B31 or something. Yeah. See, so if you if it wasn't necessary to do all of the renovations, that will still be a pretty good cash flow deal. So because of all of the renovations and because of all of the work, that changes it quite a bit. And you have to remember your time is obviously valuable as well. Someone needs to go and spend their time. So you need to kind of determine that. But I mean, even with very pessimistic rent, it still seems to work. So obviously you'll push to get 5.5 and 5.5 and 8 and 3,000 rand rent. And if that plays out, you're going to receive a good return on investment. If it doesn't, it's still better than keeping your money in the bank.
Just want to check. So I actually hope to get way more rent than that. So for example,
Now,
like that
determining
was for me
determining the
the
rent is
the
difficult. That's something that you kind of it's an educated guess, and you can't determine whether it's going to play out correctly until you actually list the property for that price. That's why I said sometimes with like some of my properties, I've listed it, let's say for 5.5. I got a lot of inquiries, but only like people that can't afford it with bad credits.
oh I
So
see.
you'll either just wait a bit longer and see if you get more inquiries, or you can drop the rent. But I mean, it's up to you in that scenario. You'll have to decide what's the best option.
Okay. I will probably start a bit higher, like at
Yeah,
maybe 6.5, and then eventually drop to 5.5
yeah, I
or
think you can.
5. Okay, cool. Uh, there are other questions I had, but they are related to other stuff. So maybe we can look at the OTP first.
Okay, yeah. So, do you have have they sent you an OTP already?
No, no. So my OTP, I downloaded about 3 of them. The one from the deeds office, the one from I don't know, legal wise, and
Okay,
one from the property bootcamp site from Lawrence Bull. I used his mostly, but then I tried to find also different suspensive clauses that he didn't add in. So I did read the books that you recommended.
okay,
I think Jason Lee did add some clauses that Lawrence didn't have, and I
okay.
used those.
Yeah, so it's important to understand suspensive clauses protects you, obviously, but sometimes that it can be off-putting for a seller. If you want to buy a property and you have, or you want to sell your property and you receive an offer with like 10 or 20 clauses, you'll rather take the offer from the guy offering the same price but that only has one suspensive clause. So some owners or some sellers really do not mind having a lot of clauses in the contract, and some do because it means that the sale can be prolonged and it might take longer to complete some of those clauses. So you don't want to add unnecessary stuff. I think with Lawrence and that Jason Lee's clauses, I think some of them is very important. I'll show you the ones that I use. You can add more on them. Or maybe you can show me the ones that you have, the clauses that you want to add. With the OTP, you don't have to submit your own offer to purchase. So when you buy a property from a rental agent, they'll send their own offer to purchase. And all of the OTPs are quite standard. They have the same stuff with like the loans and like breach of contract and stuff like that. So you can just go through the contract, but it should be quite standard. And then on that contract, you'll just add your suspensive clauses. So you don't have to send your own the using your own OTP is when you buy a property from the owner directly. That would work.
Okay, so can some of these things then be added into the suspensive clauses? So, for example, I know that there might be conditions about me getting a bond, but can I specify exactly
Yes,
inside my own?
yes, that's
Okay,
the most
just
important
including
one.
the
So
um.
with the financing, they usually have a clause saying the buyer needs to get 100% finance, but that alone isn't a good enough clause to protect you. So obviously, let's say you working on 11% on a 30-year bond. Now they give you 100% financing for the full amount, but only over 20 years and with a 12% interest rate. Then technically you're obligated to go ahead with the contract because the contract stipulates that you received 100% financing. So that's the most important. They call it exit strategies. you don't want to lose the deal, but if something goes wrong, you have an exit strategy to get out of the contract, because the OTP is a legal binding contract. So they can sue you for the commission of the agent and shit like that. But do you have the clauses? Oh, here's the suspensive
Yes,
conditions.
clauses. So some of them are just standard. This is if a company needs to be started. So already the company is already registered and
Okay.
everything's fine. I can remove this. Um, the seller being responsible for levies and taxes before registration essentially is going to make sure that I don't have to pay any outstanding taxes rates in this case.
Yeah. So with
Um,
that clause, that is law. That forms part of law. The property can't be transferred before all of the outstanding bills is settled. So it's not necessarily something that you have to add as a suspensive condition. I'm sure the agent will tell you that as well. Um, but I mean, you can if you want to.
I can remove it if it's going to be off-putting.
Yeah.
Um, so Jason said in the book, he said that uh, in some cases, put the you might have a bond, get a bond that has its own suspensive clauses. So this might be important for in the case like they don't, so that the seller doesn't force you to move ahead while you are still fulfilling the suspensive clauses that the bank wants you to fulfill.
Yeah, so that's basically your finance, your loan clause. Um, that can be changed in a few ways. I'll show you what mine says, but yeah, this basically it also just says um, the purchaser needs to fulfill the conditions of the bond. Um, but yeah, let's go ahead. I'll show you how I stipulate mine.
Okay, this allows me to send an inspector in after 5 days. It should probably be working days, but after 5 days, within 5 days, and then me being able to cancel 48 hours after inspection.
Yes,
And then a 2 week, sorry,
sorry, you can go ahead. The 2 week due diligence period.
due diligence for me to just be able to view it again, do financial feasibility, which I would have done before anyway.
Yeah. So I think
Um,
with like the last two ones, those clauses definitely scares people away. I mean, let's say you are a seller and you want to sell your property, and someone tells you one of the suspensive clauses is to do a 2 week due diligence period. That's quite a long time, and it prolongs the whole sale. So with the due diligence, I mean that's something that you will do ahead. I'm not sure if you need to add that to the contract. That kind of forms part of your inspection, your property inspection. So while you're doing the inspection and or after you've done the inspection and new things pops up, then you can recalculate some of your stuff, and then you can always adjust the offer that you made or whatever. It is something that you can add. You can always add that, and if someone, let's say the agent presents it to the owner and they don't like it, and you feel that it's not necessary, then you can remove it. So it's up to you to determine which ones is really important and if this is something that you need to add to it. But what do you think about the due diligence? What exactly is it that you want to do in that scenario?
Mostly it's just being able to. So I was looking for standard clauses that I might also use in the future. So just use the same OTP over and over.
Yeah.
But in this one, I so after we get an inspection and the inspector says everything's fine, in some cases, especially in the future, I might not want to be doing the renovations by myself. So I would need a builder to come in and get a quote, and
Yes.
then me to assess that my estimates were actually correct.
Yeah.
That's essentially what it's for me. I would have done the TPN and that sort of stuff
Yeah,
before, and I would have
I think with the
viewed the
contractor
property.
and stuff that makes sense. That's where you use your inspection clause. So when you go and have an inspection, then you'll take your contractor with you to get accurate estimates, and from there you can recalculate. And if you're still happy, then you can go ahead or you can make a different offer. Um, Something
Okay.
that I would change, which is quite important and that you need to think of with you said with the inspection of the property, finances and the property itself by purchase satisfaction within 5 days after signature of the agreement by the seller. So that basically means the inspection will be done 5 days after the OTP is accepted, right? What I do is you can add instead of saying the you have 5 days after the signature of the OTP, you can say 5 days after the acceptance of your finance. Because let's say 5 days after the OTP is accepted, the contract, the owner accepted the deal, but now you need to pay a contractor, or let's say you actually use a company to do a property inspection, and you need to pay money out of your pocket to take someone to view the property with you, and then you don't get the financing that you need. So what's happening then is you paying someone to inspect the property, and then the deal falls through and you lose some money. So the ideal situation would be to do inspection after the finance is approved, meaning that let's say Standard Bank says, okay, Brandon, we give you 100% financing with all of your terms and whatever, and from there you'll just do a quick inspection to make sure. Most of the time people don't really like that because you have the leverage, then they don't. So which is good, but it depends on the type of agent and the type of owner, and so on. So you can keep it after the offer is signed, or you can change it after finance is approved.
I agree with you. In fact, I didn't want to take an inspector there before bef- so some people take an inspector there before they actually make an offer, and I
Yeah.
think that's like 5,000 rand that you might, or even more, that you might lose if the offer is not even accepted. So,
Yeah, look, if you have a
um,
good team and you have a contract that you do a lot of work with, he might go and have a look for free. With contractors, they should be able to go out and look for free. But with a property inspector, someone that goes and looks at all of the drainage, all of the electricity, all of the roofs, they're going to charge you money. So if you want to use a property inspector, rather make it that it's after the finance is approved. If you just want to use a contractor and someone that's maybe a friend or a family friend that will go for free, then you can do it after the offer is signed. So you can kind of play around with that a bit.
okay. Do you think that a building inspector, the formal one, is 100% necessary? Um,
With properties, with sectional title properties, it's definitely not necessary because you can do some of the inspections yourself. Most of the time, the biggest issues is plumbing. Electricity forms part of your compliance certificate, meaning that before they can sell the property, um, they need to get an electrician to make sure that all of the electricals is compliant. So electricals isn't a problem. So it's stuff like structures, roof structures, geysers, plugs, basic cosmetic stuff that you can go and have a look yourself. What I've seen with houses, there's problems with drainage, like the sewage systems, like drains that overflow and stuff like that. So you can do some of the work yourself. What I don't use a property inspector because I feel that I know what to look for now. And it can cost quite a lot of money. Like a property inspector can charge you anything from 5,000 rand to 7,000 rand, depending on the amount of inspections they need to do and the reports that they write. So it's an unnecessary expense, but I mean, if it's your first property and you want to make sure everything seems fine, rather pay the extra money to make sure that you're happy with it. Um, what I try to look for is expensive fixes. I mean, if you need to replace a tap or a wall plug, or replace some lights, that's fine. Maybe replacing a ceiling is okay, but you don't want structural damage, foundation damage, or the property sinking in on one side. That's issues that you want to avoid because that can cost a lot of money. So then it makes sense to get a property inspector. But I would say go and have a look at the property. You do the inspection the first day, literally look at everything that you can, and if you think it's fine, then you can go ahead. But if you see a problem, let's say you see some foundation cracks and you worried about that, then you can consult a professional, and then you can always get someone out that can help you.
yes. I think that's helpful because, as I mentioned, I'm a bit on a budget and I don't want to be
Yeah,
wasting
yeah,
or unnecessarily spending money.
yeah. But on the same side, you don't want to
Um,
be penny wise and pound foolish, and try to save money, and maybe later on having to spend more. But it rarely happens. I mean, you can see for yourself, you'll see if something looks sketchy, and then you can consult someone.
Okay, yes, cool. The last one that you might not have seen is that they must provide proof of the property's income and expenses. What is happening? Yeah, so through a lease agreement or bank statements or a rent roll, and also the expenses, for example, the COJ account. They wouldn't have levies in this case,
Yeah,
but insurance and maintenance, sure.
yeah, that's a good one to have as
Uh,
well.
this is something that Lawrence puts in as a clause for him to get out without any excuses.
Yeah.
But cool. This is about it. The rest is really the same as before, but I can just add this as an addendum. Well, add the ones that I'm keeping as an addendum, and you can show me yours in
Yeah,
case
so
there's some that I must.
basically we covered most of them. Um, I'm just going to quickly add, I'll share my screen. Just want to open a OTP quickly. Let me just check, here we go. So this is an offer of a different property. So we'll just go through the first one. This is the one that I use that's the most important, which is about the finance. So it says, this offer to purchase is subject to and conditional upon the purchaser arranging finance suitable to himself. So this just basically means the finance needs to be, I need to be of the finance needs to suit me, and I need to approve the finance. So again, if we get a 20-year bond instead of a 30-year bond, this does not suit my finance, and then you can exit the deal. Here we can see, like we spoke about, with this offer to purchase is subject to a purchaser arranging a property inspection within 7 days of an offer being approved. This was a sectional title, so I don't need a property inspector or someone to actually go and inspect the property, so I'm not going to use any of my own money. Then you can use it after the offer has been approved. Again, you can change that whatever the deal might be. This is also one that you add for complexes, financial statements. That's very important because you can ask the agent for financial statements and they might not give it to you, so you can make it subject to. But obviously these are mostly for complexes or townhouses. Then the last one, or the important one, is subject to the use of your attorneys. So with your attorneys that Yaku gave you, so let's say for example it's Bokwa attorneys, you need to, usually the owner has the right to choose the transfer and registration attorneys. So you need to add that as a clause saying, I have my own attorneys, which gives me 20% discount on my transfer and registration. So if we can put this clause into the contract to use my attorneys, that would be great, because that would save me a lot of money. Sometimes they try to fight back on this, and what you can do is you can tell them, okay, I'll get a quotation from my attorneys for the transfer and registration with my discount included, and if your attorneys can't match or beat the quotations, then I'm not going to go ahead with your attorneys and we should use mine. So that's important because, like I said, if you don't add that, they have the right to use their own attorneys, and then suddenly your bond and registration cost will go up, and that changes the deal, the numbers again. So that's a very important one, and that's what I've seen. That's one that people might fight back on, but I mean, you do have the right to add your own attorneys, or to at least ask. So that's an important one. Then with this specific one, there was a tenant in the property. You don't have to worry about that. And then, yeah, this was one that the purchase of the seller added. The parties agree that the purchaser will have the property inspected and defects note, meaning if you see something with the inspection, they'll take note of it, and they'll either fix it or will lower the purchase price. So these are like the basic ones. I think the ones that you added on your contract is fine. In my opinion, the most important one is number 1 here for the financing. And then the attorneys that we need to add, and then obviously you already have the inspections and so on. Those are like the basic ones that needs to be in all of your contracts. If you have those, then you should be fine. I think that's basically, and it depends on how you want to phrase the clause. I mean, mine sounds different, but yours is obviously the
Yours
same.
is also a bit more concise. I wrote
Yeah.
whole paragraphs here. Do you mind if I take a screenshot of yours?
Yes, you can go ahead. So that's the whole idea.
Thank
If you
you.
have 10 sentences of a suspensive clause, it kind of freaks people out. So you'll see with this clauses, it's straightforward. It says what it needs to say. Um, and it's not like any sketchy hidden clause. It's just to protect you and ultimately the seller as well. So yeah, I think that's basically the ones that you have is I'm happy with those. If you have those, you should be fine. Did you get the screenshot?
Yes, I did. Thank you.
Okay, I'm just gonna stop that. Yeah, so I'm not sure. I think we talked about quite a few things. Hopefully, you learned something. Um, I really think the deal makes sense as long as it cash flows, and if you stress test the calculations and it still cash flows, and you've done like a worst case scenario and it still cash flows, then you can go ahead. I mean, obviously, we want to be realistically optimistic, meaning that we'll aim to get the best amounts of rent possible. We'll aim to get the lowest bond interest rates, and we'll aim to go for the lowest budget for renovations. But if something should happen, and most of the time it can go wrong, then you kind of stress tested the numbers for that scenarios. And if you can do that on every deal, in the beginning it's quite weird to kind of think of everything, but after a few deals you'll do it so quickly and so easily, and you'll know exactly what to look for, and that kind of make gives you more confidence. So if I was you, I would definitely still make an offer. Phone the agent, tell him, listen, your finance and stuff is in place. You're serious to make an offer. You really seriously want to make an offer. Maybe add 10 or 20,000 rand if you really want the deal. Otherwise, 10,000 rand, or make the same offer. You can just communicate with the agent.
Okay. Cool. I will. So I did tell him that once it's a second viewing, I wanted to make sure that I can actually add a second bedroom into the other part of the house where I divided. And I think I'll just make an offer then.
Yeah. So
So
whatever
I
you do
should see him
inside of
tomorrow.
the house, you don't need building plans or anything for renovations that you do inside of the house. As long as you don't build on, meaning you build new walls, then you don't need to get plans. So you can do whatever you want. And obviously, if you break down load bearing walls, then it's a different story. But I mean, you'll basically just add drywalling, I'm assuming, and add a
Yes.
kitchen and maybe water points, so that you don't need to add anything. So you don't need permission from the municipality or anything. So you can just go ahead with that.
Okay. Cool. I had questions about financing. So from my understanding, if I do get a cash flowing property or just a property in general, then they add the rental to my current affordability. Um, but if it's cash flowing, it means that my affordability is always growing. It doesn't actually ever reduce. So why do people then partner up with others? So for example, I've seen Lawrence. He partners with other people uh, who have cash. But I don't understand why they do, because essentially you have infinite money.
Yeah, so with the depending on what entity you use, it's still not a way to get endless financing. Eventually, the banks will see, okay, listen, this guy owns way too much properties, and his risk profile is going up because his debt to equity ratio is way too high, meaning you have 100% leveraged portfolio. So they can still eventually tell you, listen, we can't give you more financing. But you are right, with a cash flow portfolio, your financing options is much more, and you're almost guaranteed to get better financing. So with Lawrence, usually they buy properties in areas where the bank don't think it's a good investment necessarily. So they buy properties in, let's say, for example, South Joburg South or whatever, or Hillbrow, let's call it Hillbrow, um, where they see that as a risky deal, so they won't give him 100% financing. Now suddenly they only give you 80% financing. So you need to put down 20% deposit, and not everyone has 20% deposit for, let's say, 2 or 3 or 4 deals every year, including your transfer and registration cost. So partnering with people helps to pay for deposits, or it just helps for bond and registration cost, and it helps to buy bigger deals. So he focuses on buying like a building of 1.8 million rand, which has, let's say, 8 2 bedrooms and 2 1 bedrooms, for example. So with those multi-let deals, the bank doesn't give 100% finance all the time. Sometimes they do, I'm not sure. But most of the time they see it as a bit too risky because of vacancies and hijackings and stuff like that. So then they'll give you a 70 or 80% loan to value, where you need a lot of cash. I mean, on 2 million rand, if you need a 30% deposit or whatever, not everyone has that amount of money just laying around. So that's where it helps with partnering. And I think that's eventually you're going to run out of capital, or eventually you're going to run out of finance from traditional financing institutions. So that's where you use creative financing, and creative financing is something that you'll get to. So the bank's money is the easiest money to get. It's the cheapest money to get, besides from lending money from family. But you should try to get as much money from the bank as possible, and if they don't want to lend you any money from there, you'll get creative financing ways.
Okay.
Yeah.
Uh, when at what point really do they stop saying that they'll give you finance?
Well, it depends. It depends on the properties that you own, but I'll say, and it depends on your salary and stuff, and how you manage your personal finances. It depends on your entities. It depends on how much money you make within that entity. Um, but I'll say around like 7 or 8 properties, it gets quite difficult. For a normal guy, around 4 properties, it gets difficult. But I mean, that's where it's important to buy in the right entities. Even if you buy properties that's not cash flow positive, you'll be able to buy 4 or 5, where in your own name, you'll only be able to buy 1 or 2. So, but I mean, I don't think you have to stress about that for now. You need to focus on getting your first deal. Once you have your first property, we'll work on how can you get your second property. If you get your second property and they don't want to give you finance for your third property, then you can get creative financing ways, and maybe get some angel investors, or maybe just save up to put down a deposit. And once you don't have any money left to put down for a deposit, then we can look at creative financing ways.
Okay. Sorry, I was just a bit curious about these things because the bond originator told me that if I do, so I do have a P2I setup, and if I set up another one, they won't be able to see that I signed surety in the first one.
Yeah,
So as long as it's with a different bank,
yeah.
so I might be able to do like three different properties per bank after
Yeah.
some time.
So that's the
Uh,
that's the idea. Because it's a separate entity, they don't look at your affordability the same way as they would have in your personal name. So that's why I said in your personal name, with your current salary, you'll only be able to buy max, let's say, 2 properties for an average salary. When you use PTYs or trusts, then you'll easily be able to buy 2, 3, 4, 5, or 10 properties, depending on the exact structure and your amounts of loans and all those type of things. So that's why it's important. I'm glad you were able to speak to Yaku, because they're very smart with these type of things. Um, so they can really
yes.
help you, and you'll see with when you buy the property and you eventually need to get financial statements for the trust and pay taxes. For the first 4 or 5 years, you won't pay tax because of the way they structure the financial statements. um, and that's quite powerful. So, and depending on the amount
Sorry.
of cash that you make, obviously.
Yes, that was one of the things I wanted to ask, but I forgot. So, do I not need to account for the 28% tax plus the minimum of 18% tax? Because it is positive cash flowing. And if I do not use, say, the maintenance and the vacancy fees, that is also going to be taxed.
Yeah, so
at the 28%.
with the way that you structure, if you buy in your company, the tax structure is a bit different, but it's important to use someone that knows how it works. So Yaku and them, they really know how to structure the stuff. And I'm not sure if you have a property trust as well as a family trust, or what is the structures that they set up for you?
So I don't actually own any assets. He said, so the structures I have is the company and then the property, the holdings trust holding the shares in the company.
Yeah,
He's going to administer both of them,
yeah.
so you'll deal with the taxes for both.
Yeah, so they really know how to work with stuff like that, because with the companies they'll use loans and stuff to minimize taxes, and if you need to pay bond and registration costs, they'll deduct that from your income, and they'll deduct, let's say for example, some of your repairs and maintenance on from your income. So at the end of the day, maybe the first 1 or 2 years you won't pay tax, depending on the amount of cash flow that you make and depending on your structure. So if you start getting assets and you have a family trust, you can always make loans from your family trust to your property trust. And that's another way that you can deduct taxes from that. But I mean, don't stress about the taxes. You don't have, you can maybe just speak to him and give him a cash flow projection, and ask him or one of his, one of the ladies that works for him, if you have to account for a certain amount of tax within your first year. I'm 90% sure you don't have to stress about that, but I can't say. You maybe just need to confirm that with him.
Okay,
The idea
cool.
would be to pay no tax. That's the idea of using the right structures as well. Um, so yeah.
Yes, I don't want to pay tax. Uh,
Yeah, but thanks, man. I'm not sure
cool.
if there's anything else that you wanted to know. Hopefully, it was insightful and you learned one or two things.
Yes,
Um,
I definitely did. Thank you.
yeah, so
Thanks for the
you
session.
can let me know if you made the offer and what happens. If they don't accept it, brush it off, move to the next one, find the next deal, and next time you'll know to kind of jump on it quickly. Just if you see a deal that makes sense, immediately you'll make an offer with all of your clauses, everything is in place. You know how to run the numbers. Then you save time, and you're the first one to make the offer. Um, there's like a saying: you make or you view 100 properties, you make offers on 20 of them, one of them gets accepted. So that's kind of the name of the game. It's you rarely get the property, or you rarely get the first deal you make an offer on. That would be like the best case scenario. But I mean, you shouldn't get demotivated. Sometimes it's difficult, but just brush it off and go to the next one.
The thing is that I got a bit emotionally attached to the
Yeah,
cash flowingness of this property. So
yeah.
I really, yeah,
Yeah,
but
it's
it's
it's a
fine.
numbers game, but if you fall in love with the deal, it should be because of the numbers, not the way of the property or where it is situated or how it looks. So it's normal to get excited if you see a good deal, but I mean next time or maybe this time, okay, you should act on it immediately. If you know it's a good deal, I mean I've lost a ton of deals because of taking a bit too long, or kind of doubting yourself, or maybe just not acting on it immediately, or someone was just a bit quicker than me. And most of the times you'll see good deals goes quickly. So if you see a good deal, it's a good deal, go for it. But I mean, again, we need to focus on your first property. You need to get to your first property, and from there you'll know what to do.
Yes,
But okay, cool,
cool.
man. Then keep me up to date. Let me know if you have anything else, and you can send me a WhatsApp if you have some questions, and we'll chat from there.
Thank you very much.
Cool, man. You should enjoy your
Um,
weekend, and we'll talk soon.
Thank you.
All right.
Have a nice weekend too.
Cheers, man.